We're going to have a look at the 2009 incomplete record question. 2009 is the last time that an incomplete record backwards method was asked. So it's an important one for us to be able to work with, and we're going to go through it now. A lot of the workings are very similar here, and therefore, if there's a working which we've covered in the previous videos on incomplete records, 2015 and 2013 videos, then I might assume that you have that knowledge. Instead, I'd like to concentrate more on the actual structuring of the question, but there are a couple of new workings as well. So it's about a sole trader called E. Fuller, and they've purchased a business for 400,000, and they have the following assets and liabilities. We'll have a look at that in a moment. And then there are 6 paragraphs of information. The first paragraph in the question is to do with drawings. The second one is all about a loan. The third one is about bank payments and bank receipts. The fourth one is further drawings. The fifth one is some expenses, provision for bad debts, and 2 depreciations, which will be new to us. And then the sixth one is all of the information at the end of the year. What are the assets and liabilities at the 31st of December? There are a couple of ways you know that this is a balance sheet method. First off, it doesn't ask you, it doesn't give you cash payments or bank or cash lodgements or any of that kind of stuff. And secondly, and more importantly, it asks you to do the balance sheet first, and then the trading profit and loss account afterwards. And there is a little bit of theory as well. But when it says to do that, we know that we have to do the balance sheet first. Now, in the other questions, I told you that there were 5 initial workings that need to be done first before we can proceed. Here, 4 out of those 5 are not required. So the only one of the first 5 really that we need to do is opening capital. So you enter in all of your assets from the top sentence. You enter in your liabilities from the top sentence. The only new thing here is the fact we have an investment, but that's a financial fixed asset. You know we have capital of 400,000, and you work backwards to get 436,900. This does not add up to 436,900, so therefore we have a missing goodwill number of 6,250. The first working done. Now, I say to you that you do not need to do a cash account or a bank account, but be careful here. The reason we don't need to do a bank account is because we have been given this 5,400 at the end of the year. If you look at your question, you will see the second last figure in the whole question tells you there is a bank overdraft of 5,400, and that is a credit balance of 5,400. If you were not given that in the December assets or liabilities, well, then you would need to go back to paragraph 3 and you would need to create your bank account like I have taught you how to do with the cash book incomplete records. But you do not need to calculate your sales, nor do you need to calculate your purchases. Instead, we'll work backwards to those when we get there. So therefore, we can go on down here and see what else needs our attention. Well, once you have those first 5 done, or in today's case, the first 1, then you look at the other things which are due and prepaid. In the top sentence, there is rates prepaid of 450, so therefore we do a rates working. Just like insurance in the previous question, you take your rates and you add on an amount prepaid at the start of the year. You take away an amount prepaid at the end of the year, which you get by dividing by 12, multiplying by 3. This gives you your actual rates payable. Now, in this question, then, it does say that 20% of rates payable in paragraph 4 are for private use, so you take off 20% drawings to get your 4,560 is your business rates. We'll do general expenses because we have an amount of wages due at the start of the year, which we need to subtract. And then also there are drawings with the general expenses. It says in paragraph 3, the last part of paragraph 3, the payment for wages and general expenses include €3,000 petrol bill for Fuller's private use. This is his petrol bill. You also take that out. The business general expenses are 75,800. And we do the light and heat. We're inspired to do that because of the electricity due and the stock of heating oil at the end of the year. So you do your light and heat, and you take away your closing stock of heating oil, because if it is sitting there at the end of the year, then it has not been used. So therefore, we're trying to get our light and heat used. You add on the electricity due, which has been used. That gives you your light and heat used. And from that, there is also 20% drawings, which you take off to get your business light and heat. And then finally, maybe we should have done this as working seven, the investment income, because this is also in the top sentence. We have a €50,000 investment. We're told that it's a 5% investment. So therefore, we should be entitled to €2,500 of an income. If you check paragraph number 3, it does say that during the year, Fuller lodged to the business bank account an EU grant of 6,000, which will be capital introduced later on, and investment interest of 2,500. So we have received that 2,500. Therefore, the amount due is zero. But in another question, we may only receive 1,000, and you would have 1,500 due, for example. And so the investment income working will yield you an income and possibly a current asset, but not in this case. That's everything in the bottom sentence stuff. Then we can go and do the paragraphs. Now, paragraph number 1 is just referring to drawings. We'll deal with that when we do the drawings account. So let's look at paragraph number 2, which is about the loan. This brings us on to working. I have them numbered here, working 9. Of course, we skipped 4 workings earlier on, so it's not entirely accurate, but it says on the first day of August 2008, which is 7 months into the year, 5 months remaining, Fuller borrowed €120,000, together with 30,000 of his own funds, was used to purchase an adjoining premises. Now that is irrelevant, because that means that the premises, I've written here that the premises goes up to 442. That new premises was actually 150,000. 150,000. It's just that he only had to borrow 120,000. The 30,000 that he put in of his own funds, that is also capital introduced, like the EU grant, used to purchase an adjoining premises. Let's get back to the loan here. So, it was agreed that the sum borrowed will be repaid in 20 equal half-yearly installments. We'll do that in a moment. The first installment becomes due on the first day of February 2009, which is next year. Let's look at the interest first. The interest is to be charged at 6% and is to be paid monthly at the end of each month. So that's why we do 120,000 here by 6% by 5/12 for the last 5 months. That gives you €3,000 on your calculator. Now, if you look at the bank payments, it says that we have paid 2, so therefore there is a current liability of 1,000 loan interest due to be paid. Now, this 3,000 would be your business expense, but for the fact that in paragraph 4, it says 1/4 of the interest payable should be drawings intended for private use. So therefore, you have to take a quarter off this, 25%. The business interest is actually 2,250. Now let's look at the loan repayment for a moment. Here we go with the loan repayment. It does say that the loan is to be repaid in 20 equal half-yearly installments. So that is, a half-yearly installment is 1 installment every 6 months. How much are the installments? Well, 120,000 divided by 20 is €6,000 paid off every 6 months, starting on the first day of February next year. So that means that next year there will be 2 payments, the 1st of February and the 1st of August, I think. So there will be 2 payments next year. Therefore, how we deal with this, and we've seen this before, is you're going to move 6,000 by 2, which is 12,000, from the finance by section, from it being a long-term liability, into the current liabilities section, where it is going to be an immediate liability, something that is falling due in the next 12 months, a current liability. I'll have a look again at that when we do the question below, but that is the workings for the loan repayment. And that's everything catered for in paragraph number 3. Sorry, paragraph 2. Paragraph 3, we may come back to in a moment. We've done everything in paragraph 4 now. But in paragraph number 5, there is some information about a provision for bad debts and 2 depreciations. So the provision for bad debts, well, the old provision for bad debts is 0. They didn't have one. It says in the question that he's going to set up a provision for bad debts. So therefore, he sets it up to be 3% of our debtors number. That's the debtors at the end of the year, which is 1,020. That's the number that you're going to subtract from debtors in the current assets. And of course, that is an increase from 0 up to 1,020 is an increase of 1,020. And an increase in the provision for bad debts is an expense in your accounts. Now, then we can have a look at the 2 depreciations, which are referenced in paragraph 5, but of course, there's also information in paragraph 3 that we need to take on board. So depreciation of delivery vans, it says depreciation of delivery vans should be 15% on delivery vans. Now we bought the delivery van, if you look at paragraph 3, we bought the delivery van for €30,000 on the first day of September this year. So that means that we're only going to depreciate it for September, October, November, December. That is 4 out of 12 months, which gives you €1,500 as an expense. And also in the fixed assets. Now, depreciation of equipment is slightly different because we had some equipment at the start of the year, 20,000. So therefore, that is by 10% for the full year. And then you have other equipment which you bought during the year, €15,000 worth of equipment which you bought halfway through the year. So therefore, that is 15,000 by 10% by 6 over 12. You have to add the 2 bits together to get your full expense, which is 2,750, also relevant to the fixed assets. And then finally, you have to do your drawings. And these stock and cash drawings come from working number 1, €80 per week for stock gives you 4,160, and €170 per week for cash gives you 8,840. And then the rates and the petrol and the light and heat and the interest we have all catered for in the above workings, giving you a total drawings of 1,9,422. 1 or 2 new workings in there, but 1 or 2 left out as well from the other type of question. Here's where the question differs significantly from what we have done. Now, I'm going to work first on the balance sheet, which is part A. So we're going to talk about it over here. And there's all of our fixed assets. Should be straightforward enough. Our equipment went from 292 up by 150,000. The new premises, sorry, our premises, the new premises that we bought to 442. The equipment, well, 35 take away depreciation, and the furniture is 30 take away depreciation. You also have goodwill of 6,250, and you have an investment at the start of the year, unless you're told that you've sold it, you still have it at the end of the year, of 50,000. Total there is 559. Let's look at our current assets. Closing stock given to you in the last sentence, but be careful to treat the stock of oil slightly separately. But that is the 20,500 there from the question. Then you have your debtors of 34. Take away now the provision for bad debts. That's a minus in there. And then the one that we had to work out in the question was rates prepaid and expense prepaid as current asset. Then we have our current liabilities. Creditors from the end of the year. We had our bank overdraft given to us, or you might have to work it out. You have the loan interest due. You have the electricity due of 460. And then I just want to show you here about this loan repayment due, to reiterate what I was saying earlier on. The loan repayment, that is 12,000 being taken off the loan of 120 and moved from being a long-term liability up to being a current liability, which leaves 108,000 as still a long-term liability in the finance by section, but now current liabilities are creditors, amounts falling due within 1 year. That's now €12,000 up here. You add up all of these to get your 54,260, take one from the other to get your working capital, and your total net assets is 559,970. That's a really important number in this type of question, because here we are going to have to have 559,970 and then work out the missing net profit number. Let me explain what I mean here. So you have your loan of 108 now. You have your capital from working number one in the top sentence, 400,000. You also have the additional capital. Now that is the EU grant and the extra 30,000 of his own personal money to buy the adjoining premises. Then you take away the drawings of 19,422, and all of this must match. This 559,970 must match this 559,970. So therefore, the net profit is a deduced number. It is the number that is required to make this finance bisection equal the total net assets. And that in this case is 35,392. That's the number then we can go over and start our backwards system with here. So I would tend to encourage students to write out a skeleton here. So you're going to write out your sales, less cost of sales, opening stock purchases, closing stock, gross profit, minus expenses, and add gains, and your net profit. So write out the skeleton of the question first. But here we are, we're going to start with our net profit. Taken from the answer to the balance sheet, we must assume we are correct, 35392. Now we put in our incomes and our expenses. There is one income, interest received, and there are 1, 2, 3, 4, 5, 6, 7 expenses. All from the workings, I think. Yeah, every one of those we had an adjustment on. And so they're all expenses. Now, how do you get your gross profit? Well, normally speaking, you would be starting with your gross profit and you would less expenses and you would add gains, and that will give you your net profit. We're working backwards here, so we reverse that function and we go net profit less the gains of 2,500 plus the expenses of 94,008, and that will give you your gross profit of 126,900. Now, here then, you have to refer back to the question. I'm looking at the second paragraph from the top where it says, during the year, Fuller did not keep a full set of accounts, but he does estimate that gross profit was 20% of sales. So therefore, if we have the gross profit, we call that 20%, and we extrapolate upwards here, divide by 20, multiply by 100 to get our sales number of 634,500. When you have sales and you have gross profit, that will allow you to get this. This is the difference between them, the cost of sales. And then we can input in our opening stock and our closing stock, which we have from the question, and that will allow us to get purchases. How we do that is we say again, we're going to reverse. Normally speaking, it is opening stock plus purchases, take away closing stock gives you this. So you take this final number and you add your old closing and you take away your opening, and you're going to get 491,800 as your purchases. One final thing to do, the purchases before we took out our drawings of stock would have been 495,960, and then you take away that 4,160 to get this. So how do we get that 495,960? Again, we are reversing the function. We're adding the drawings to this to see what it was beforehand. There's a little bit of theory here, but this theory is the same as what information, it's what advice would you give to Mr. Fuller? Well, you would say, please use proper double entry bookkeeping system. And then you would have available to you general ledger, trial balance, total sales, total purchases. You would have a bank account, capital drawings account, expenses and incomes. And basically all the adjustments that we had to do would be readily available without resorting to the use of any estimates or any guesswork if he was to use a proper system of accounting.